Hello friends. Hope all of you and your families are safe during these times. In the next few minutes, I am going to take you through the key events of the recent past and Kotak Mutual Fund's view on equity markets. What a year 2020 has been for investors. From the sharp drops in March where there were cries of despair to the swift rise and the significant surge in November where everything that seemed to go right went right for equity investors. November was a month of significant news flow. Highest quarterly profits by India Inc. amidst a pandemic, elections in US post which we saw flows coming into all emerging markets, 3 positive developments on the potential vaccine against COVID, and to top it all, record FII buying in Indian equities courtesy a huge rebalance by MSCI indices. Let us examine each of these in some detail now. First, the earnings report card. Amidst the pandemic, when everyone was worried about corporate profits, India Inc. delivered a strong surprise, surpassing muted expectations handsomely. This was led by broadly 4 factors. 1. Sales of the June quarter that didn't happen because of the lockdown spilled over to the September quarter. 2. Ahead of the festive season, company filled up their inventory and channel anticipating a recovery by the festive season. 3. Massive shift from the unorganized to the organized sector. And 4. Very sharp cost control as many costs like travel, advertisement, etc. were curtailed. With economy opening up and normalcy setting in, this earnings backdrop has brightened prospects of profits improving over the coming few years. Secondly, US elections. This was a key event which global investors were watching out as a source of potential volatility. With the US elections broadly coming in line with various polls before that, markets heaved a sigh of relief, and global cash in sidelines kept for such volatility found its way into various assets, primarily into Asian emerging markets, as many market participants now believe that trade wars, which was the hallmark of the Trump era, may possibly be less of a priority as Biden takes over as the next president. Third, vaccines. We had 3 vaccine trial announcements, Pfizer, Moderna and AstraZeneca, which announced their global results of their global trials. By and large, medical science has leapfrogged to develop a vaccine in such a short period of time, and it does appear that a large portion of global population will be vaccinated over the coming few quarters to come. So, as to go back to our lifestyles, by and large, which we had pre-COVID. Specific for India has been the encouraging results of the AstraZeneca trial, which is in partnership with the Serum Institute, which is likely to provide vaccines for the Indian population. Fourthly, FIIs. FII poured into Indian equity like never before. EPS upgrades following the stronger than expected showing by corporate India, as well as the rebalance by MSCI, which increased the weight of Indian equities from 8% to 8.8% in the widely followed MSCI Emerging Market Index, meant an unprecedented rush into Indian equities by FIIs. To recall, FIIs had pulled out 65,000 crores in March of this year when markets tumbled. And in the month of November, they put back a similar amount of about 65,000 crores back into Indian equities. DIIs, the domestic institutional investors, which had supported Indian equities in March, buying them as they tumbled, to the tune of approximately 56,000 crores in March, booked profits to the tune of about 48,000 crores as FII money rushed into Indian equities. Thus, we have now seen a rebound of Indian equities into all-time highs. While there are many Indian savers who have kept the faith in Indian equities despite all the volatility that they have seen early this year, they have been very well rewarded for their perseverance. But there are many who have stayed in sidelines, and with interest rates and alternate asset classes earning lower rates, we would advise investors to look at the bigger picture rather than being focused merely at index levels being at all-time highs, etc. Markets have definitely risen too soon, too fast, given the confluence of events in November, and they will take time to digest all these developments and flows. Indian economy will normalize, corporate profit pools are rising, interest rates are low, and while they may move up a bit as economies across the world normalize, they are unlikely to go back to the levels which Indian savers have traditionally experienced in the past. Given this, a disciplined asset allocation with a focus on longer term goals is imperative, and equities continue to be an important avenue to fulfill longer term goal obligations. Be patient investors and do remember, time in the market is more important than timing the market. Stay safe. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
5 पैसा के प्रोडक्ट्स और सर्विसेज के बारे में ज़्यादा जानकारी के लिए और लेटेस्ट अपडेट्स के लिए हमारे यूट्यूब चैनल को सब्सक्राइब कीजिए। 5 पैसा के साथ निवेश और ट्रेडिंग की शुरुआत करने के लिए 5 पैसा मोबाइल ऐप डाउनलोड कीजिए।